Guys, so how are we all doing? So Dan from Trading with Dan here. This is our Bitcoin evening update. If you guys wouldn't mind smashing that like button, and we will go over to the charts. And I know what you guys were thinking. You were thinking, it's got a t-shirt on. That's strange. Normally Dan's wearing a vest. But yeah, basically it's just t-shirt time, I guess. Anyway, so what is going on? What is going on with Bitcoin? So yeah, as you can see, this level that we drew in this morning, we drew in this horizontal this morning, so we're not going to try and pretend that we had it drawn in and we came down and touched it. But we came down and touched it and bounced off it, so we thought we would draw it in as a relevant level. Maybe we are going to form Bitcoin's going to form like a sort of box, a rectangular box pattern at this level. Or maybe even a wider box pattern, or possibly we could regain this trend line, and then we could put this down to just the corrections that went on in wider markets yesterday, which were clearly going to have an impact on Bitcoin. And we can, if we do regain this trend line and do continue to fill out this area, we could potentially regard this as anomalous action, just based on well, what happened. It wasn't really necessarily Bitcoin related, and Bitcoin could have come down a lot more based on what was going on in the gold and silver markets, but it didn't. So yeah, one thing that is interesting, just for you guys that use the TD as well. I don't use 1 hour charts, but I did fancy having a look, see how the 1 hour, see if we'd got like a 1 hour 9 at some point on this low. So I swooped over to the 1 hour chart, and yeah, as you can see, we pretty much had, if it's going to load up, it will show you. So yeah, we had the 9 candle there, accelerated into the 9, and then that bounced the price. Obviously, we had this what is basically a liquidity hunt. This is a textbook liquidity hunt. Took out the low of that candle, triggered the stops underneath there, and then immediately brought back up and away, and didn't give anybody any chance to well, get out of their short trades that were triggered, or just a pullback to buy again. And then that got all the way up to the 9 again, where we basically topped out at that point. You can also see we had a sell 9 that we blasted through there, but we did have a sell 9 here, so we accelerated again into this 9 candle, and that pretty much marked the high. We also had a nice 9 down here, which did mark the low, and a nice doji candle, and we had a nice 9 up here. That after that we pretty much sold off, and there was another one I think I saw when I had a brief look. I mean, yeah, I mean, there's a 9 there, 9 there. You can kind of see how the market does react to these. On a lot of occasions it will have some sort of reaction, even if it's sideways or reverse, or occasionally it will just blast through them. But even then, look, you can still see it was offering a bit of a reversal. So anyway, that was just a quick look at the TD that I do like to use. So anyway, back to what we're looking at here on the 4 hour and on a more respectable time frame. To be honest, a lot of you guys are probably thinking even an hour is high time frame, but yeah, to be honest, I would trade a lot 15-minute charts, but that's just if I was just being very aggressively trading. But yeah, I'd rather just take a step back. Everything's fractal in nature, so you can take a step back, just look at higher time frame charts, go for higher moves. Wait for your entries, and it's basically, like I said, it's all a fractal, so it's just the same as just what you're doing on a smaller chart, except for at the end of the day, you probably make more gains looking at larger time frame charts. So there you go. So anyway, yeah, so basically, so what we're looking at is we're trying to regain this trend line. We lost the trend line. We did hit what was obviously horizontal support from here. So now we've got to get back inside this zone, and we've got to start making progress. If we don't, then this will just be a back test of this trend line that we broke, and then we'll expect a move back down, and then clearly take out these lows, and then we'll be gunning for the 10.5 area. That's obviously not what we want to happen over here. We want to get a move on and get back up. We'll have a look at the stochastics, see how they are looking now. Obviously, that gave the 4 hour a lot of time to reset and a nice move down, and now we are starting to move back up again in the 4 hour. So that from obviously where we are now gives us a pretty sturdy base to at least try and hold this trend line. If we look at some stokes on some other time frames, obviously 10 hour and 12 hour, 12 hours moving down. 12 hours obviously problematic. because we do like the 12-hour. We can potentially draw this trend line in here and see if we can get caught at this trend line and move back up. If we do, that'll clearly be bullish, and we'll pretty much already know realistically whether price action is starting to move its way up. Daily obviously pointing down here as well, pointing down and moved out of this obviously very bullish zone here. 2-day has turned over, and 3 days looking to turn over as well. So yeah, larger time frame, it is obviously just based on those momentum indicators. Larger time frame, I mean, you can kind of see it just by visualizing price action. We do seem to have stalled out up here, so that is not to say that we won't just have a bullish reset of those indicators and just hold this zone, trade sideways until they start to all turn up again, or the higher time frames. Most notably the 12-hour turns back up again, and then we start to see a nice move back into the channel, into the triangle, and then a break up. That's obviously an ideal scenario for us, but yeah, obviously the flip side to that is that this is only really a retest of this trend line that we've broken, and we are gonna see more downside and take out these levels. But again, looking at the daily moving averages, you can see how bullish this moving average posture is. We did lose the daily 21, and we are still have lost the daily 21. We've still lost the daily 21, but the daily 21 has obviously flew up with price, as you can see here with this move, and is a long way away. So from the 50. So this almost is a case of, it's not just price action that needs to catch up with the moving averages. The 21 moving average itself needs to catch up with the other moving averages, or the other moving averages need to catch up with the 21. So I mean, it's still obviously not bearish. Things don't become bearish for me until, obviously, as we've been saying, we lose 10,500. I do think anywhere in this zone, this main support at 10,500, if we get held and turn back up from there, it's still bullish overall, and I still think we'll then take out 12,000, get ourselves to 14,000, and basically upwards and away. Let's have a look at Tesla. We was talking about Tesla basically being done. So obviously the scammy fraudulent fine paying to the SEC market manipulator, that is Elon Musk, suddenly decided that Tesla shares were overvalued, so he needed to do a stock split, and that rallied price. It is just complete coincidence that it was about to break down what is actually looking like a descending triangle, with a target quite a bit lower. Obviously that was just coincidence, guys. Clearly nothing to do with the chart patterns at all. Nothing to do with the chart patterns. Just pure coincidence, guys, and don't you forget that. Pure coincidence. So anyway, Tesla, yeah, so had its bump up. So obviously nothing material has changed, other than there is a lower barrier to entry for some people that want to buy shares. So basically, working on the assumption this is coming down, that just means people that have less money, that can't afford to buy the current price Tesla shares, can now afford to buy those Tesla shares, and in my view, probably lose money. So way to go, Elon. You are a legend and a great wealth distributor. Anyway, also we will just have a quick look at the this is not a daily, we'll go to the 4-hour. I just wanted to show you guys, this is what stocks do. I literally said in this morning's video, stocks just bounce back in stock bounce back fashion. That's what they do. They have a down day and they come all the way back up, all the way, and even higher. We actually traded even higher than our previous high yesterday. Would you believe it? Obviously we would believe it. If we go over to the daily, you can see what happened. There is a heavy amount of sarcasm in my voice, isn't there? But I don't mean to be sarcastic. I'm just saying just stocks are strong and they're going up, and that's it basically. If you think Bitcoin's going up, gold and silver's going up, you've got to think stocks going up, because it's just cash is trash, isn't it? So we had the 9 anyway, saw some volatility, straight weakness on the 9, traded lower, and obviously once we took out the high of that 9, that triggered the buy entry, and now we're moving onwards and upwards. So quite simple that in stocks. Nasdaq pretty much the same. If we go to, yeah, you can see we just bounced off the trend line that we've had drawn in since wherever, with some little, I obviously did a chart for someone, and did some little potential touch points. Yeah, I don't know why that was missed. I don't know what happened then, but that obviously line just a second ago was lower. But yeah, I was just pointing out these touch points. This was a question mark because this is when I drew it, and clearly we did basically touch it and bounce up again, because this is when we were looking weaker from here and everyone was panicking, and it's like, oh no, and I think well, clearly there's the arrow I drew, and I was like, basically we can either come down or just come down and touch it at some point, and we literally did touch it, and I can promise you guys that arrow wasn't drawn there after the event, because it was drawn here, this point in time, with this question mark here. And anyway, and you can see top of the channel, bottom of the channel. So basically, there are some people. I used to trade at very similar channels to like this in oil markets, like very successful in it. It literally just felt like, is this a real job? Can I really be making this money doing this? This is ridiculous. And funnily enough, the Nasdaq traders are just thinking, is this a real job? I mean, I just buy this bottom, sell the top, buy the bottom, sell the top, buy the bottom, sell the top, and I just get rich. And yeah, I mean, that is literally what markets are sometimes. Gold, let's have a look how gold is doing. Big indecision candle here, and obviously the major trend is up, and we are looking at trying to regain the daily 21 and aggressively upward moving daily 21. So this is obviously on a daily, but if you look at it on a 4 hour, you can see well, you can see we touched the 200 on the 4 hour pretty nicely. On. Wait for it, guys. Wait for it. So we topped out basically on a 4 hour 9 here, and we basically bottomed out on a 4 hour 9 there. Excellent. And then you will say, well, but Dan, there was a 4 hour 9 there, and we didn't top out on that one yet. But you guys know the rules. If we trade or close, if you want to be aggressive or close a 4 hour candle below it, that's your short entry, which we didn't get because we just moved onwards and upwards. But this one up here, we did. Either you trade or close, or however you want to trade it, but either way you then get the move down. So there you go, taking out the top of this 9 candle. There's the buy. So there is the TD 4 hour for gold, which is my favorite time frame, the 4 hour, for lots of assets actually. Because I mean, because I use mainly 4 hour charts, I guess that answers that one, doesn't it? But also I do find it works pretty well, the 4 hour. You do get pretty decent moves off it. When the trades are confirmed, and obviously trades are confirmed if you don't basically break or trade below it. Dollar index, we'll have a quick whiz at that, a quick look at that. So yeah, I mean, this is a 4 hour. You can see we are, yeah, I mean, we're back below here. I expect we'll play out this zone and come down. I don't expect all of a sudden the dollar to start strengthening. So there you go. So anyway, back over to Bitcoin. My real point is that markets are okay. We had a bit of a wobble yesterday, and I wouldn't even call it a bit of a wobble in all fairness. Oh, oil again. I'm not going to bother showing you guys, but oil basically has retraced practically all of its move now. It's only the precious metal markets that are lagging, the gold and silver. But hey, those markets had been on a very big fast run. So there was clear profit taken to be taken in those. And don't forget, the Fed wants the stock markets up. It does not want the gold and silver markets up. So they will be doing everything they can. The Fed and JP Morgan will be doing all that they can to try and keep those markets down. But you can't keep a good man down, and you can't keep those down. They'll keep going up like they are going up. They will just obviously struggle a bit easier than the stocks, which are probably going up more than they should go up. So, and that's just the world we live in today, guys. It is the manipulated price control world we live in today, with the Politburo basically just deciding where everything should be. And we've got yield curve caps coming in as well potentially soon, which is going to be an interesting dynamic for the markets, because what a lot of people don't understand is that, okay, Japan has got yield curve caps, and the difference between basically pinning the yield curve and actual doing quantitative easing to hold down interest rates. And this is is a little bit complex, but I will explain it quite simply for you guys. Is that basically central banks realistically work on a lot of confidence, and they don't actually do a lot in the market. So when they are by brute force doing quantitative easing to basically buy bonds to keep interest rates low, They have to spend a lot of money. But if they say, right, we are capping this yield curve here, and we are going to buy as many bonds as it takes to keep the interest rate at X, at whatever low value X is, the market knows that that's what it's going to do. So the market just knows that. So it's not going to try and fight basically what it knows the Fed is going to do. So then the Fed doesn't have to actually buy as many bonds. This basically is what happened in Japan. So they were not having to buy anywhere near as many of the Japanese government bonds once they said, right, we're pinning the yield curve here at basically zero. As they had to buy before, when the market was just like sort of thinking, well, they want to keep prices low, but they're not necessarily saying exactly what they're gonna do. So we can test them, we can push, we can see what's going on. But when they flat out say, right, we're gonna do whatever we gotta pay, the yield curve staying here, then you just don't fight it. So that means what's okay, right? So what that means is that the Fed then has actually not having to print as much money to pin those markets down. And then that is not good, because that's basically what markets are rallying on. And if the Fed is not increasing its balance sheet as it is doing because it doesn't need to, markets are potentially going to tank. And also don't forget the dollar could strengthen up as well on that basis, because like the same principle that they're not printing as much money to do what to basically do what they need to do. So it's quite an interesting concept, and I don't think many people, even finance professionals, I don't think they quite understand basically how it's worked in Japan. Because, well, to be honest, most finance professional is generally an oxymoron, really. They're always looking for free money or fraudulent things to do, or cheating, or front running, or just trying to by brute force throw money, speed of whatever at things. They're not necessarily anyway. But my point is that they don't understand this, and if we have a yield curve caps and yield curve controls, then that literally could send the dollar up a lot, when you might think the opposite is true, because everything's relative. How much we're having to print to do quantitative easing to keep rates where they are, versus how much do we realistically have to buy when we told the market will print anything, so don't test us. Right, so anyway, there we go. So that is a potential threat. That is a potential spanner in the works that I guarantee you won't hear anyone else talking about until basically it happens, if it happens, and then they'll be like, well, we didn't expect this, and then you guys will be like, Trading with Dan, he actually said that, didn't he? Because it's basically what happened in Japan. So that is our best example, and oh wow, we should have known this. But anyway, there you go, guys. So remember, this is definitely not it's not financial advice. I'm not a financial advisor. Always do your own research, and I will speak to you guys in the morning.